Okay, welcome to this live session, and I hope you enjoy your weekend. I hope you had a fantastic weekend. Well, let me not waste your time with a very long preamble. We will just move on straight into this live analysis. Okay. All right, it's about let's say 13 minutes before the market open for this trading week. Before then, let's analyze a few pairs as we have outlined in the Telegram channel. Okay. All right, if you are joining in for the very first time as you were logged into the live trading room, of course, this is the live trading room here. Please, in order to get a better video quality at your end, move on to the settings tab here and make sure your video quality is set either to the 480 pixel or to the 720 pixel. Of course, the higher the better. So 720 pixel should give you a better resolution at your end. All right, let's look into the Forex Factory economical calendar to see those high impact news events that are scheduled for this trading week. Okay, today's Sunday over here. No, nothing happened over the weekend, so we might not see much of market gaps because we didn't see any scheduled economic event happening over the weekend. All right, for tomorrow being Monday, we have only one bank holiday. Okay, bank holiday coming from Japan. I think that is the only event that is scheduled for Monday, being 12th of February, and nothing else. That means we might see some abnormal volatility on all Japanese yen crosses. Either price will be too slow, or we might have price just moving in unusual momentum. Okay, on Tuesday, just one CPI. Wednesday seems to have a lot, especially coming from the American dollar axis. Thursday has a heavyweight high impact news event coming from the Australian dollar axis. This one is going to happen early enough, so we are going to avoid trading all Australian dollar crosses before this news announcement on Thursday, the 15th of February, because this is similar. This news announcement is similar to the NFP that is being released from America. Okay, this is similar to the NFP that is being released from America. It can spike price in heavy momentum, invalidating most of our technical setup. Okay. All right, after that, nothing really much here. Bank holiday from China, again on Thursday and Friday. Nothing much. Others are normal high impact news event. All right, let's see the charts and conduct our analysis. I would like to begin from the euro against the American dollar, just like we have outlined in the Telegram channel. Okay, let's follow that order because I am sure most of you have already arranged those pairs the way we have listed them. All right, the euro against the American dollar. Let's begin from the higher time frame. That's the monthly top to bottom 1 hour time frame. Okay, let's do this analysis that way. I know that as a part-time live session, we are not supposed to look into the shorter time frames, but for the sake of discussion, let's just do that because we are holding some a trade here. We're holding a trade here. In fact, this was a very how do I describe this? This was a careless trade. Okay, it was a careless trade. We are going to close it out. Before then, let's analyze the pair. In the monthly time frame of the euro against the American dollar, let me just adjust this chart a bit. We have price trending to the downside. Of course, you can see lower swing highs and lower swing lows, okay, in form of a channel. Let's draw our trend line, keeping those highs neatly, very neatly, keeping those highs very neatly. Connecting the outer trend line, connecting the swing highs, so we can have an outer trend line. That's it from the monthly time frame. That's the outer trend line. Let's change the color of that line to pink. right? You can decide to use any color of your choice, but we are sticking to pink. So whenever we're trading the short time frames, we know once we see a pink line, we know it's coming from the monthly time frame as a level of support or resistance. Well, you may also want to keep the lower channel leg here in the monthly time frame. You may also want to keep that, but it's really not necessary. Okay, but let's just keep it for the sake of profit taking. All right, so you can see how price has been bouncing off the channel leg, respecting the high as resistance and respecting the low as support. Okay, price is trading very close to the upper channel leg, and that is resistance zone. Like I said, this is the area we're expecting price to hit. That area right there. Whatever you are seeing here now, it is not over. The bulls are not done yet. Price is still likely to push to the upside. So let's drop a line there around that point, around the 1.2752 area. Okay, that's where we're expecting price to make to face some rejection. Any push there, we're expecting price to face some rejection. It is not yet time, and that is why we are looking for that long entry. Okay, in the weekly time frame, what do we have? Let's see, trend line. The weekly time frame, we got this little swing right there, but this one here is just too small enough. That micro swing that we are seeing, and the outer trend line will be somewhere in there, which will be too far away. So let's try to begin the trend from here. Let's grab it from there as our focal point right there, changing that color to blue. All right, so that's the focal point for that trend, because if you want to begin from here, you might end up having this one here as the outer trend line. Okay, that's the outer trend line, but as you can see, price is still far away from that outer trend line, so we will simply delete that one. Okay, in the daily time frame, now this is something that you have to understand. See how this line did not really align probably in the daily time frame, because we drew that in the weekly time frame. So in order to be more accurate, if you try to adjust this line in the daily time frame, you are likely to see something else in the weekly time frame. This is part of experience. It's something you have to gain over time. Let's see the weekly time frame now. Do you see that line? Do you see how it has eaten into the candles themselves? So you cannot really read price action in the weekly time frame. So what you have to do is to keep this line in the weekly time frame. All right, keep it that way. Change the property, the visualization property, to only show in the weekly or monthly time frame. The weekly and monthly time frame time frames, you can keep it right there. At least you can read that clearly here. Then you want to draw another line in the daily time frame. Okay, in the daily time frame, you can draw from here. Was that the okay? I think I am making some mistakes. Let me zoom in the chart properly. Right, that's the beginning of the trend. All right, so you can keep this in the daily time frame. Now change the visualization properties to our daily and the shorter time frames. I think that will be more accurate. Okay, so here you know that if price comes here, then it is definitely around the weekly line, and that should also reflect in the weekly time frame. Okay, let me not waste your time. Let's move on. In the daily time frame, what do we have? We can connect this level and this one here to see where that falls. Okay, that's right. Let's change that to red. Keep it within the daily time frame and the hourly time frames. that's red. It's obviously valid line, and price is trading around that level. I think that's what has really given our trade an edge, that we saw price bouncing off that area. Okay, the trade is actually at an optimal area. It is actually taken at an optimal area where price is expected to push to the upside, and you can see those twin spinning top. All right, those are reversal candles. These spinning tops are reversal candles, although of low quality, but they are giving us the hint that price is about to push to the upside in the euro against the American dollar, and that is the only reason why we might want to keep this trade a little bit longer. All right, a little bit longer. Remember, we are risking just 1%, so if we keep this trade, it is worth it. If price turns around, kick our stop loss out of the way, we are not going to lose more than 1% in this trade. Okay, so let's hold the trade at least for today or Monday and Tuesday to see if we are going to have some pushes to the upside, bouncing off this daily level of support, that trend line right here. Okay, aside from that, I also saw something in the weekly time frame. Let's see that. Let's connect these highs, this one here and this one here. Let's just connect that counter trend line to see what's happening. Okay, right there, this one and this one coming around that area as support. So let's zoom in to see that. So it's more of a pullback. It's more of a pullback to retest that zone. So this is an optimal area as support to look for buy entries. In the daily time frame, so we are having price trading at a point of confluence. Can you see that? That's a point of confluence, a high probability point that price is likely to bounce to the upside. How about Fibonacci retracement? Let's take it from this low to that high. Can you see again? Price is around Fibonacci retracement zone. In fact, precisely the 50% Fibonacci retracement zone. So this is a high probability zone that price is likely to bounce to the upside. Let's see the shorter time frames. I'm going to actually remove this line. I don't want to keep too many lines here. Where will price head to? Where is the next area for price to bounce to? Well, I am assuming that price is likely to hit anywhere around India, that area. It's very likely to push to that point. So let's keep that trade. In the 4 hours time frame, we can mark this area as resistance. I am sorry if my explanation is taking too long. It's eating into your time. Okay, let's keep that area. This one here is quite difficult to keep, so let's not keep anyone there. You might also want to draw a trend line. That trend line, let's keep it within the daily time frame. Sorry, within the hourly time frame, the shorter time frames. Okay, the market has just opened. I can see that right now the market has just opened for the week with a little gap to the downside. So that's the trend line, and it's only when price breaks above that trend line that we have the green light that the bulls have taken over. So let's wait for that. In the 1 hour time frame, in the 1 hour time frame, we have a range. Let's just draw the high of that range. That's the high, and this is the low of that range. So our stop loss is hitting a few pips just below this support level. This is support area in the 1 hour time frame. So the stop loss is hitting just below, which is a good level to place the stop loss. Well, we are not prepared to move this stop loss any further. We are not ready to shift ship, so or jump ship. We are just going to let the stop loss be where it is. with this hesitation candles in the daily time frame, those two spinning top, giving us the hint that price is likely to push to the upside. Let's hold a bit more longer to see what's going to happen. Right, so that's it. Let's look into the next one, the sterling pounds against the New Zealand dollar. Actually, let's begin from the weekly time frame. In the weekly time frame, we have already determined levels of support and resistance. So let's analyze price behavior within the daily time frame. Okay, this is the daily time frame. Actually, I didn't touch this. This is the daily time frame of the sterling pounds against the New Zealand dollar. Let's mark our key levels of support and resistance. This area, that one there is resistance. Let's keep that daily time frame, or even with the weekly. Then we can keep this level as our key level of support. Actually, we did analyze before, drawing that that trend line where we took our trade right here. Okay, but we are not going to keep that line for now because price has not taken out this previous swing low, even though we are getting the hint that it might take it out, but it's too early to draw that previous swing low. So we are going to analyze this little price behavior here in the 4 hours time frame. So in the 4 hours time frame, we are more particular about price action from here, from this level right there. Okay, that's it. Let's draw that levels of support and resistance. Let's even use our shape tool because it is more of an area. Okay, we can also keep one to the upside. It's an area. So this is support, this is resistance. Now our trade is clashing against level of support. Can you see that? Level of support. Are we ready to risk this little profit? Are we ready to risk this little 50% profit to the market against this level of support? Are we ready to do that? Well, in my opinion, I am not really ready for that. I don't want to give back this profit to the market. Let me see what's going on here. 19 pips, 19 13 12. Okay, all right. I'm not ready to give back, so I am let's allow for spread to reduce. Let's allow for the market to take a break, to calm down, because now spread gaps might be too wide. Okay, allow for the spread to reduce. Probably before the London market opens, we are going to cash out another 30% of our profit. Cash out another 30% of our profit, leaving the remaining 20% to run in the market to any direction. It could keep pushing to the downside. It could push up to hit us at a break-even position. So once spread gaps are reduced, we are going to cash out 30%. I think that's a good plan, not to give back all to the market, because chances are that price is going to respect that area of first support, push to the upside, find resistance somewhere in there before coming back down. Before then, we would have been taken out at break-even position. All right, so in the 1 hour time frame, this is the area of resistance. Let's keep that within the hourly. Okay, then what else? And nothing else. But before the London market open, we are going to cash out some profit in this trade. Let's move on to other pairs. Now we have some trading opportunities coming from the Canadian dollar crosses. So let's analyze them one by one. Unfortunately, they are all coming from the Canadian dollar axis, so we will only pick just one. It's either you pick one pair, okay, one pair, or out of the many opportunities across those pairs, if you are trying to risk 3% on all, then you can spread it 1% each. 1% each. At the end of the day, you will still arrive at 3%. Okay. Right. Now the first one is the Canadian dollar against the Japanese yen. Let's see the weekly time frame. All right, the weekly time frame. Although this one doesn't have a high quality trading opportunity, and that is why we are going to kick it out. First of all, we have higher swing lows, more of higher swing highs there, but quite a very weak higher swing high. Let's draw our trend line. The trend line has been taken out. Let's keep it here, change that to blue, keep it within the weekly, daily and hourly time frames. Okay, so that's a valid trend line that has been taken out. Price is likely to make some pullbacks before coming back down for a possible trend collapse strategy or a breakout pullback bounce, whatever price action we get at that particular level. Zoom out this chart to see if that trend line is accurate. You have to be more accurate with your lines. Okay, now in the daily time frame, nothing really here. Okay, we can keep this trend line by connecting those highs. Change that color to red. Okay, now in the weekly time frame, there is something that we are also observing. This is a swing low here, retested right here. This is a swing high, also retested right here. So effectively we are having this little range. So let's mark that area. We can use a standard trend line. The levels are more precise. Change that to blue. Also keep it within the weekly and daily and hourly time frames. That's the high. All right, so price is actually reacting off a level of support. Here is a level of resistance, so we are in a range. Let's see the daily time frame. Now daily time frame, let me be more accurate with this level. All right, in the daily time frame, you can see how price respected that level, bouncing to the upside. Let me zoom in this chart again. Okay, now this is a bounce candle, a sign of rejection of this level of support. You should not be hitting your sell button at this point. This is a hint that price is likely to push to the upside, but the quality of the candle is what we do not really like. And why? Because the wick to the upside is just too long for our taste, and that is why we are striking out this trading opportunity. Beside that, it is happening around the weekly level of support, so we should be looking for signals in the weekly time frame and not in the daily time frame. We should be looking for those reversal candles in the weekly time frames, pin bars, railway tracks, pinning tops around the weekly time frame and not the daily time frame. Although this in the daily time frame, it signifies a potential push to the upside. So if you are trading the Canadian dollar against Japanese yen, please avoid hitting your sell button with that hint that we are seeing in the daily time frame. All right, in the forward time frame, nothing really here. 1 hour time frame, let's keep this high, although it seems we are having that counter trend line, but let's just keep this high. Let's keep this high here. Black. Okay, nothing more. That's all. Nothing to analyze here. Again, price has the potential to push to the upside. Now let's see another Canadian dollar cross the New Zealand dollar against the Canadian dollar. Let's see the weekly time frame, or even the monthly time frame. In the monthly time frame, we are likely to see it's a range. Okay, it's a range, but not a very clear one. What a flat top. Okay, let's just see that. I know that this area, let's insert the shape. This area here has been holding price. Okay, it is an area, resistance there, resistance. This is a fake breakout. It's a fake breakout, resistance there as well. We might also be having, let me take this one. We might also be having this area acting as support. Okay, this trend line has been damaged several times. It keeps breaking over and over. You can see this from here. Got broken, not strong enough. Here, price failed to take out the previous swing high, came back down again, fake breakout. So it is not really a reliable trend line. So we wouldn't want to keep this one here. Okay, we will not want to keep that because this level has not taken out the previous swing high. So let's delete that. Okay, let me change this color to pink, since it is coming from the monthly time frame. Okay, now in the weekly time frame, let's see what's going on here. Weekly time frame, price has been finding support around that level. Let's try to draw that. It's a bit of an area as well, but let's keep this. Okay, here as well, price has been finding support many times, and you see that. Let's try to use the shape tool. I'd like to mark that area. Okay, using pink. Keep it within the weekly, daily, and hourly time frames. This color is too deep. Let me use a lighter color. Okay, I hope you can see that color clearly. All right, so that's an area of former support, which may now act as resistance. So price is at an optimal area to look for short entries. In the daily time frame, actually, I am going to mark this, although it might belong to the 4 hours time frame, but it's already shifting to the daily time frame. So let's keep that, keep it in red. We can also keep this low. It is a range. This trend line is not really reliable. It's not a reliable one. That's why I'm going to take it up. In fact, we have a trading opportunity. This is a reversal candle. It is a good rejection. We are having the hint that the next candle would be a bearish one for the New Zealand dollar against the Canadian dollar. So this is a valid trading opportunity to place a sell stop order. Stop loss 50% is too aggressive. We can place it just a few pips above that high, but the risk reward ratio from the stop loss to our entry and entry to the next level of our support is not really good enough. Okay, so let's keep this aside until we decide. 1 hour time frame, nothing to analyze here, just a range. You might want to draw this little trend line, but actually we're not going to be trading anything on that trend line, so let's keep it aside. The next one is the American dollar against the Canadian dollar. Let's see the monthly time frame. Monthly time frame, trend line from, that's the focal point, outer trend line, still very far away from current price, so we are going to remove that. Next trend line from this focal point, see that it has been damaged. It has been damaged right here, so we are going to take that out. Not valid. What else? Let's take this now. It seems the trend direction has now changed from up to down. The trend direction has changed, so let's keep this one. Change that color to pink. Okay, Now what else? This is a level of support, maybe that one here, but still too early for the monthly time frame. So let's move on to the weekly time frame. Be more precise with your lines whenever you move to the shorter time frames. Weekly time frame, we actually struggled with this pair throughout the last year. I apologize. That's an area of resistance. In fact, the price went all the way respecting that area. Now we are not really going to keep this line. It's a weak one, so we will be focused with price behavior around this junction of the chart. Actually, there are two possible outcomes. It's either price is in a range, price is warming up for a range, or price is warming up for a channel formation. Any of those two could happen, but right now the channel seems to be holding faster than the range. So let's draw the channel leg. This is the upper channel leg. Let me change that color. Okay, then this is the lower channel leg. I think we have analyzed this before, and you can see how price bounced off that lower channel leg. But in the daily time frame, price is now trading around an area of resistance. Okay, that's it. So let's mark that level. Okay, change that to red. So whenever we see that line, we know it's coming from the daily time frame. Now in the daily time frame, you obviously can see the fake breakout of that level of resistance. That is a valid trading opportunity. Although let's see the hindsight oracle indicator to see what's the projection. The inside oracle indicator is calling for two candles push to the downside, then a possible push to the upside. That's possible. 75% correlation. Let me take that out, and we are only interested in those two candles push to the downside. Well, for me, I am seeing something differently here as well. We are likely going to have a triangle formation. Price is at an optimal area to look for short opportunities, but the fall might not happen that easily. Price might likely meander around before coming back down. So what we should be doing to be safe, we are trading not to make losses, we are trading to remain profitable. So we already have the idea that price is bouncing off that area of resistance, but this is the most optimal line that we should be considering, that even though price wiggle around this zone, sorry about that, even though price wiggle around this zone, our stop loss should not be hit. Anytime it should come back down from that point. So instead of placing the stop loss aggressively 5% above the 50%, you are very likely to be hit. You are very likely to be eaten by that stop loss. Okay, so in my suggestion is to be very conservative. Okay, we are not in a hurry. Just give it enough room, place it somewhere in there. Your lot size is definitely going to be reduced because the stop loss value is going to be wide enough. So you are going to replace, be very conservative with that. Go to bed, sleep, relax, don't you worry. If price doesn't come down the first second day, it keeps pushing upwards, any moment soon it's going to likely drop to the downside, because what they usually do is to push up, take out all of those stop losses before they drive price back down on its merry way. Okay, so that's what we are going to do. So let's keep this. The projection is that we are having an expanding triangle, then price has the chances of coming back down somewhere in there. So it's a good one, good risk reward ratio, enough room for price to come to the downside, no levels of support against our trade, so it's a good option to take. So let's just keep this one. First, we will let you know once we make our final decision. You will get that in the Telegram channel. For now, let me just keep the one on top, remove this one. All right, in the forward time frame, what are we having? Nothing here to draw. 1 hour time frame, we could draw this level of support. Color that in black. Okay. What else? Nothing else. That is basically all. The trading opportunities in the daily time frame. Like I said, the price is likely to make some little pushes before coming back down. So even if we are taking this trade, it's going to be a sell limit order somewhere in there. Sell limit order. All right. Next one is the sterling pound against the Canadian dollar. This is another one that is looking to push to the downside any moment soon. Let us be fast a bit with this analysis. In the weekly time frame, let's use the shape tool. Price is trading around an area that has been holding price as support. Just a bit deeper color. Sorry, as resistance, and an area that has been holding price as support. That's it. So we are actually in a range. This is within this range. This is optimal resistance zone to look for short entries, and within this range, this is optimal support zone to look for long entries. Okay. All right. Having said that, let's look at the weekly candle. That's the last weekly candle close. This candle is suggestive. In fact, not this candle alone. There is a sign of exhaustion around that area. That price is likely going to push to the downside. If I am really going to share my trades, if I'm going to share my risk, if I'm taking 3% in all, then I might be taking 1% each. Okay. Here I might be placing a sell stop order and a stop loss just a little bit above, and keeping that trade for 2 weeks. 2 weeks. Okay. All right. So anyhow, we will let you know the trading opportunities are likely going to come from the weekly time frame. In the daily time frame, we are already seeing that much hesitation. Last Friday's candle close is also suggestive of the fact that there is a lot of selling pressure at that level. So let's draw a trend line in daily time frame. This is the focal point. That is the trend line. Keep it within the daily time frame. Weekly and daily. Okay. Now that's the trend line. This is the beginning of the trend. Nice bounce off that level. We have all of this room to look for short entries in the sterling pounds against the Canadian dollar, if that trading opportunity is going to play out. Okay, and that's about let's see, about plus 280 pips. That's huge pips. So let's keep that and see what's going to happen. In the forward time frame, actually you can see how price has been having hard time cracking through that long-term level of resistance. Each time it pushes to that point, it finds resistance. It just keeps bouncing off that level. At a certain time, it might not be able to push through again. We might see price coming back down. And already we are seeing the hint from the longer time frames. All right, let's see if we can connect this level. Okay, from the 4 hours time frame, we are having harmonic bounces off this line, and right now price is trading around that level. That level has now been damaged. That is a sign of more sellers in the market. Price is likely to push to the downside. So let's stay bearish with the sterling pounds against the Canadian dollar. Like I said, all trading opportunities will be shared with us, showing our entries, stop loss, and the possible profit taking levels. Okay. Right, finally, the American dollar against the Swiss franc. I am liking this pair, and it seems we'll be finding an aggressive entry with this one. In the monthly time frame, we actually had these little bounces there, even though price didn't really take out the previous swing high on that bounce. And that is why this trend line is not really a very strong one. Okay, so we are going to remove that. We're going to keep it somewhere here. That spike candle, then mark the high right there. That's resistance. Again, if you look deeply into this range, you will find out harmonic bounces of that area, that support. So we can also keep another one there. Let me zoom in for you to see. Remember, in one of my reviews, I told you that this is a key level of support. We are likely to find a breakout congestion continuation pattern in the monthly time frame, as price has broken below that level of support with a momentum bar to the downside. We are likely to see this month, being February, being a hesitation candle. Price just simply moving up and down within that area before finally deciding where to move to by next month. So whenever price, since we have the idea that this is going to be a congestion candle, whenever price move towards the upper boundary of that area, in the shorter time frame, we should be looking for short opportunities. Okay, short opportunities, looking to take profit within the bottom line of that area. Anyway, let's see the weekly time frame. Okay, weekly time frame. This is it. Look at this. Weekly time frame. The trend line is quite far. You want to keep this level, but it's still far away from price. Anyway, let's just keep that. Okay, nothing else. Daily time frame. We already established that counter trend line connecting these lows. Okay, that's that in the daily time frame. All right, I will not hesitate to look for short entries around this area any moment soon. If I do that, you will also be notified. This is an area to look for short entries, hitting the sell button straight on. There's stop loss somewhere just above. All right, and we'll be looking to take out profit anywhere around here. Anywhere around here, we'll close that trade out and wait again. Like I said, price is likely going to just be swinging around this area for now until this monthly candle close. So below here, let's keep the level of support. Four hours time frame. That should be a 4 hours level of support, but still too seems to be getting old. Let me just change that to green. Okay, we should also have a rising level that has been holding price. Let's see that in the shorter time frames. Not really looking good. Okay, let's take it out. One hour time frame, we could mark this area as support. Okay, I'll be very happy to go short with the American dollar against the Swiss franc any moment around current price area. If price is able to push to this point, if price is able to push to this area, that would be an ideal location to also look for short entries. Okay, the American dollar against the Swiss franc is a nice one to look for short opportunities any moment soon using the aggressive trading approach. Okay, any trade that is taken, you will definitely be informed in the Telegram channel. Okay, so just sit tight, be patient, we will definitely let you know. This is basically all for this review. If you have questions, contributions, anything important, please post it in the live chat window. Unfortunately, majority of you are not registered in this chat application, so you are not even reflecting here. Probably you are only watching the video, but anyway, as long as you are watching the video, we are seeing that from the view statistics. We know the number of persons watching the video. We are just fine by that. But if you think you have something to say, please get registered with this chat app and type in your message here, send it to us. We will read it right here and respond to that as soon as possible. Okay, thanks for being here. Again, we'll be talking before the London market opens. To have a nice rest. It is late here, and any moment soon I will be going to bed. Bye for now.